Well, life insurance is a product that provides for family after the death of a loved one. And it provides for a death benefit so that the remaining family members can continue on carrying on the lifestyle or taking care of debts that a loved one has left behind. Well, there's really two main types. You have term insurance and permanent insurance, and with permanent insurance you have several variations that might lead people to think there's three types. So with permanent insurance you have whole life and universal life, but those are essentially two or the three types of insurance available. Well, we'll sit down with the client and we'll do a needs analysis, and we'll decide first how much they need and then cost out whether it's permanent or whether it's term or whether it's a combination of permanent and term. So we decide how much they need first and then go from there. Currently, if an individual buys life insurance, it's not taxable, or the proceeds on death are not taxable, but in some corporate situations it can be taxable, but for all intents and purposes, proceeds of life insurance are tax-free. Usually three factors. If we exclude medical conditions, it's usually your gender, whether you're male or female, your age, and whether you smoke or don't smoke. Well, what you're doing is you're making an investment in the people that unfortunately you leave behind. You're creating a fund so that these people are not saddled with debt, or if they want to provide for education for their children afterwards, they've got the proceeds in place to do that. Well, we'll typically sit with the client and go through their and conduct a needs analysis. We take into consideration their debts. We take into consideration any future income that they might get from, whether it's the government of Canada, and then determine, based on that, their children. We come to a value that we think might take care of their future needs. You can, if you've got a whole life policy or a universal life policy with cash values, those can be cashed in, or in some cases it's best to keep the policy and then just borrow against the cash value. The rates again are determined based on whether you're male or female, how old you are, and whether you smoke or don't smoke, and then obviously the overall amount of the life insurance. You should reach out to a Young's broker, even if you're not sure whether you need life insurance, because the process for us to determine that is fairly easily. We can do quotes fairly quickly over the phone and give you an idea of what life insurance would cost you. The other thing too is that most people have a mortgage, and if they've got a mortgage policy through the bank, typically in 80 to 90% of the cases that we've looked at, we are less expensive than banks, and the terms and conditions associated with an individual policy are a lot more favorable if you buy an individual plan through a Young's insurance broker rather than a group life insurance policy through the bank. So buying life insurance at a young age is a lot less expensive than buying it at an older age. Now, of course, you're going to pay premiums during that younger period of time, but most importantly is the fact that typically when you're younger, you're insurable. That's when we know you're going to be able to get insurance. As you get older, unfortunately, you develop conditions that even though you might think you're healthy, to an insurance company, you're not healthy, and you may not get that insurance. So I usually encourage people to look at getting insurance while they're young, because they are insurable, and it precludes the fact that later on down the road they might not be able to get it.